Cool. What a fucking day. I didn't like the morning at all. Morning was fucking horrible. Uh, that's just because, you tend to become impulsive when you want things to happen. You get into the trades, but they never really work out. So again, doing the same thing, I always mark out my buy side or the highest swing high or the lowest swing low, which would be sell side liquidity, prior to 8:30 and after 12 o'clock. Great. Go ahead and get that right here. Perfect. One other thing that I had marked out was on a higher time frame, of course, on the 15-minute. I had marked out this fair value gap, which is like um, base, calls it a BISI. Anyways, it's a fair value gap on the sell side. So there's a buy side inefficiency. So market needs to reprice into it to the fair value gap. Plus, why it makes it more high probable or high probability is because of that order block as well. So order block plus fair value gap, that is high probability. That's like a fucking, he calls it a unicorn. So during the morning, we go down to our 5-minute chart. Here's your 8:30 open. Market was just kind of in between these two liquidities, not really pushing it for anything. And I'd also assume just because Powell was going to talk today, so the market really didn't do anything until he spoke. But during this morning time, here's your 9:30 open, right over here. Nothing really. If you see, not a big pop or nothing really happened. So we were just kind of stuck in between these two. And I was watching ES on the other side, and ES had made a lower low, taking out its sell side liquidity. And to my knowledge, I thought that NASDAQ would do the same, but it eventually got close to it, but never really did. So in the midst of all of this, I was getting chopped out. I took a few of the trades that didn't really plan out for me. Um, and as I've always said in our group chat or anywhere, Nasdaq is an overshooter. So in such choppy situations, especially for Nasdaq, you're more likely to get chopped out because of it overshooting. And in these chop situations, what I've noticed is always is like there would be a rise and then a big retracement, but then another rise, but a big retracement. So that is not a market where you want to trade. You kind of want to just sit on the sideline. And I can tell you myself just from today, you're going to take losing trades and then you're going to feel that because you have now this drawdown, you need to get it back or a revenge trade, and it's just not good for your psychology. And you try to go in again and try to get it back, and then it doesn't work out, and now you're more drawdown. So it's best you just kind of stay on the sideline and wait for a smoother setup to happen, either in the PM or the next day. Just sit out for the day. Just close your charts, get away from them. So once I took those losing trades, I did step away. but I kept tape reading. I was just going to come back in the evening time, which is right about now. And as you can see, it almost reached for that sell side liquidity, but never really touched it. So I wanted to kind of take the liquidity and then show me the displacement towards the upside. But nothing really happened. If you can see, we're just literally just going sideways. And even for scalping reasons, it's just, you know, there's a 50% probability that your trades are going to work out, and 50% is not good probability. You might as well just flip a coin and, go for heads or tails. Heads is buy, tails is sell. So as we keep reaching, looks like he was going to talk around 240. Um, and NASDAQ started to reach for a higher high for the sell side liquidity. And by this time, I was already away, but here we can see it took out the buy side liquidity from around the London highs at 430. And what, of course, I would like to see is for it to displace towards the downside. Doesn't really give that as well. You can see all this choppiness, and then that entails that it would be a displacement. But again, with also now being the lunch hour, we will not be trading. This is an hour that you really just kind of want to stay away from, just because, the algo is just doing this thing. So we had that displacement, not really a retracement, but it goes into that fair value gap right here and drops lower. And as you can see, one of the targets, of course, could have been this low right here, and then this low right here, so on and so forth, going back into the sell side. But 1240 arrives, and we have this massive jump. Now, with that being said, of course, we did have a higher time frame objective, which was that 15-minute fair value gap and the order block. So I was kind of looking for the price to do what it does. And usually the first move is always the manipulation, and the next move is the real one. That goes for the FOMC, anytime Powell is talking. Honestly, most of the data sometimes, just because the first move is always just like, haha, gotcha, bitch, and then it moves forward. So I waited, and still, in going into lunch, we're still in the lunch hour, so I really did not do anything yet. And what I kept noticing is that I kept reaching higher and higher into that fair value gap on the 15-minute. And as you can see, boom, touched right into that order block, which was almost at the midpoint of the fair value gap. So once I saw that, now we're going into after lunch hour and to 1 o'clock. So for me, now it is okay to take a trade. Now, as I saw this first displace or first two down candles, I waited, like I had said yesterday. What I'm looking for is the first move to kind of just create a swing low. Perhaps it could go back up, take out, some stops, which would be the stop hunt, and then look for a displacement that takes out the most recent swing low. So as you can see here, it does that. I'm just gonna mark that out. And of course, as you get your displacement, here you have your order block. And very tiny. I mean, of course, I didn't really look too deep into this entry. I was just looking for any retracement that goes into that order block up here, which is this right here. That is a volume imbalance. So I would like for price to come reach back into it, and we would start targeting these equal lows right here, which is also your sell side liquidity. And whenever it's an equal lows or equal highs, I see them as high probability because there's a lot of liquidity there, and market is definitely going to go in there, go to that objective to, of course, take it out. And here we see it going back up into that order block right here. Just touches it right there. So I don't know if I'm able to do this button. I just learned this. So, let's go with one contract. I'll do usually two, and then I would put the stop right here. I don't even know if I can. Whatever. And then, of course, like I mentioned, my first target would be these lows. So here we are. Quick drop. We're looking for, a movement that is in favor of your trade itself. So what we're gonna do is I'm gonna just put a limit order if I can. I don't think I can, but anyways, starts to move lower. You could also see there's another huge down close candle which created a fair value gap right here, and the next candle, of course, reaches back into it. And also this order block. To the T. Waiting for our sell side target, and we would sell one right here. And then going down, there's a lot of fair value imbalances right here that market could have reached into and, sort of bounced up. But what I wanted to kind of see is that since it reached this higher time frame objective of the rebalancing or repricing of fair value gap in an OB, I knew that the higher time frame objective was completed, and now it's um, going into a sell model. So here we are. This was your buy model, and this is your sell model. So what we're going to look at is that this is going to be your original consolidation. This is your buy model starting. This was your accumulation, basically consolidation, accumulation, same thing. But your buy model and then sell model. Well, for your sell model, of course, you're going to target these lows right here. I'm going to take these out right here. So, reach back into it, and then that would be another if you wanted to take another partial or add more to your position. Here's your another fair value gap. The order block is all the way up here, but what you're looking for now is at this point that from this low to this high, you're already into the discount area. And as well as, since you're in the sell model, anything below this 50%, which is your equilibrium, is going to be high probable in terms of completing the objective that we're looking for on the sell model. So as we see, keep that there, goes into that fair value gap and then reaches for the targets right there, and then we can buy another one. Hmm. These are not easy to do, bro. Holy crap. I'm like trying my best to kind of like make sense. But this is kind of just me just trying to journal for my own self so I can watch it back like and let myself know that like you got this shit unlocked. Uh, My trading for the day didn't really pan out in these amount in this amount itself. I was using lower margins or lower units. This is a full contract. I was doing micro lots. I was, of course, my target would be to, of course, regain my drawdown that I had. I had a drawdown for $600, and seeing this as I traded it, I ended the day with plus 200. So tagged and bagged for you, pack. All right. Like I said, learn this shit on YouTube.